This morning on BRN, what to know about disability insurance. Joining me now to discuss this and a lot more, Phillip Snyder is a senior vice president with the Warner Companies. In full disclosure, he's also my father. Dad, great to see you. Thanks again for joining us on the program this morning.
Hey, good morning, Jeff. Hope all's well with you.
Uh, just making do, doing the best I can. Dad, I want to talk to you about a different type of insurance. I think in the past we've talked about life insurance, we've talked about long-term care insurance. What's disability insurance?
What is disability
Yeah,
insurance?
what is it?
Well, it's insurance that provides income in the event you're disabled. That's I guess the simplest definition, but then we can extrapolate from there. It comes in all different forms, all different durations. Some is employer provided potentially, otherwise some could be an optional coverage, or some could be bought directly from an insurance company.
So there's private disability insurance. I think what you're referring to, you can get it either through an employer or get it privately through a one-on-one type of relationship with with an insurance company. Doesn't Social Security also offer some type of disability benefit?
Yeah, Social Security has, they call it SSDI. Social Security has pretty restrictive requirements in order to qualify. Generally, in order to qualify for a disability benefit under Social Security, your disability has to be projected to last at least 12 months or longer, and it only covers total disability. And then the calculation as to the benefit level is predicated on your working duration under Social Security, how many quarters you've established. You need 40 quarters under Social Security, quarter being a 3-month period, to maximize your Social Security disability benefit. But it's a fairly restricted benefit, and it's not so easy to qualify for it.
Yeah, it sounds like it's a kind of a high hurdle. Hence, why we're talking about private or group level disability insurance. Let's start with the employer first, Dad. Do most employers offer some type of disability benefit to their employees? I'm talking about large corporations, mid-sized corporations.
Yeah, for the most part, sure, they do. They offer it in several forms. One, most employers give employees vacation days, personal leave days, and some level of disability days. Larger employers, typically that's self-funded, there's no real insurance involved. So let's say you can accumulate days for up to 30 days, for example, just to pick a point in time where you can use your accumulated days through those various resources to provide income in the event you're out of work. Um, but typically, employers provide some form of short-term disability, which means it kicks in after, it could kick in after a week, it could kick in after a month, it could provide benefits for as long as 6 months, 90 days, even up to a year, and it's a short-term benefit. So it pays typically maybe 2/3 of your basic salary up to some maximum level. If it's employer paid, it's a taxable benefit. So that's short-term disability. After short-term disability runs out, then long-term disability, group long-term disability insurance can kick in. And that can be a benefit that would extend the coverage potentially all the way through your working lifetime to age 65, to age 67, or even to age 70, depending on the plan design. Typically, long-term disability plans cover not only total disability as defined in the insurance policy, but they also provide incentives, financial incentives to return to work and things of that nature. They can include cost of living adjustments, for example, although that's rare, but they can on occasion include a cost of living benefit. So through the employer, if it's employer paid, then those benefits, whatever benefits you derive through those types of disability plans, are taxable income. To take
All
it a
right.
step to take it a step further, real quickly, on the employer side, many employers offer optional long-term disability benefits, where the employee, typically through payroll deduction, can buy additional or basic disability benefits. If those benefits become payable and they're paid by the employee with after-tax dollars, then those benefits are tax-free if and when they're received.
Yeah, and you actually answered the question I was going to ask, which is, okay, there's an employer portion, which sounds like it's paid for, it's included in your compensation, but then you have the option to go out and buy additional insurance to support if you become disabled. Dad, thinking back to our conversation about life insurance, if you recall that we talked about term life and we talked about whole life. If say I pay for the disability insurance, but I fortunately, knock on wood, never have to use it, does it build a cash value like a life insurance policy that I could have access to? So what happens if I don't use it? I just paid it and it's there and it's gone.
Typically, and for the most part, they'll use it or lose it
Yeah.
type of product. So if you don't use it, which is not necessarily a bad thing, but if you don't use it, then the money you paid in is forfeited. On the other hand, there were, and I guess potentially still exist, some individual disability policies that you could buy that had a return of premium feature. So if you didn't use the product or if you didn't derive benefits at least equal to what you paid in, that you could recover some of the premium that you had paid in. So, but that's not something that we did a lot in our practice here. And I don't even know if those products still exist, but for the
So,
most part, there is no cash value in a disability policy as such.
so thinking about the consumer, how does this product fit into some of the other products we discussed? So life insurance, insuring yourself and your family against loss of life, um, long-term care insurance. Where does this kind of fit in to that broader conversation about protecting your financial future?
Well, okay. I mean, that's pretty much an easy one in the sense that, I mean, the
For
fundamental
you,
question
not for me.
well, no, but I mean, in terms of conceptually, the fundamental question that you have to ask yourself is, if I become disabled and can't work and therefore derive no earned income, can I manage my finances for my family? And if the answer is no, or potentially yes to a limited degree, or yes, I can cover some but not all of those expenses, then you may need to consider buying disability insurance because the incidence of disability, uh, be it long term or short term, during one's working years is far higher than the likelihood of dying while you're in active employment. So we don't always think of disability insurance, but it can be a very vital product for financial stability for those people who don't have enough assets built up to otherwise sustain themselves.
Yeah, and kind of, thinking. This is not just uh, an affluent type of product. I mean, if you're the primary breadwinner and you earn $100,000 as an example, this this is still a viable product or for consideration for what I would call real Americans, just
Yeah,
regular
I,
people.
I, I agree. I think it's applicable to pretty much anyone who's actively at work, who would become disabled and therefore lose their income. Um, Certainly it's more applicable for people whose financial well-being is derived solely from their income, their ability to work. But then amongst the more affluent, for example, employer paid long-term disability plans don't cover uh, bonus income. They don't cover employer contributions to 401k plans or the like. So those are sources of income that aren't typically covered under group employer paid plans. And therefore, but you can insure them through optional plans in one form or another. So anyone whose inability to work would create financial hardship for them and their families should consider disability insurance.
And just to go over the taxability, I think you covered this at the very beginning. Would any income derived from a disability policy be subject to payroll tax, federal and state income tax, local tax, et cetera?
Well, if the benefit is derived through employer paid contributions, where the employee made no contribution, and the employer paid contribution doesn't pass through as taxable income to the employee, which in some cases we have clients who have plans like that. The company pays the premium, the premium is taxable, and the employee is taxed on the premium. In situations where the employee is paying the premium, the benefit is income tax free. On
Okay.
the other hand, in situations where the employer is paying the premium and no portion of that premium is reported as income to the employee, then the benefit payable would be taxable.
Yeah. I mean, it certainly, you want to know, the way I kind of think of this, just as you're describing the benefit, it's kind of like a middle, if your long-term care is your long-term care insurance and your life insurance is there to protect your loved ones, this is more like a shorter term type of benefit, a medium type of benefit that you would want for protection, because you still have your savings, if you have savings, your 401k, where you can, I'm just trying to think about the pool of assets that an individual might have.
Well, yeah, but I'll give you an example.
Real quick.
Real quick, they have a client who, at age 47, he had a business, a thriving business at age, but it was a small business, largely dependent upon him. He suffered a stroke. He never worked again. He's still living. He's now 70 some years old. He's still collecting a disability benefit and will for the rest of his life. That contract probably no longer exists in the marketplace. Typically, those benefits end, as I said earlier, it's age 65, 67, age 70. But he had an older policy, and he'll collect that benefit for the rest of his life. His business closed down within a year of his disability. So that's long term.
Yeah, and do you have to? Last question, Dad, because we'll bring you back again next month to talk more about this stuff. But do I have to go through a physical like I did for my life insurance policy in order to qualify? Do I have to get blood drawn and all that kind of stuff?
Typically, through an employer paid or optional employer sponsored plan, most, if not all, of the available coverage is guarantee issue, which means
Okay.
there is no medical underwriting. But if you as an individual go to ABC Insurance Company as a one-on-one and want to buy disability insurance, you're going to have to be underwritten for the most part, and you're going to have to be generally healthy to obtain the coverage.
Yeah. Well, it's good to know, and certainly, we like to continue to talk to you about some of these benefits. I think a lot of people maybe don't know or need a reminder, and I think that's why you're here. Dad, always great to see you. Thanks for joining us, and we look forward to having you back on the program again very soon.
All right, Jeff, talk to you soon. Bye now.
And don't forget to subscribe to our daily newsletter, The Morning Pulse, for all the news in one place. Details, of course, at our website, and your subscription helps support all this great BRN content. And we're back again tomorrow for another edition of BRN. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the change.